Alan Neckman of Agora Financial joins us now for our final trade of the day. And you really called it. You were looking for a bounce back in the market. And in fact, the Dow had its second best day of the year on Tuesday.
Right. So we had a short squeeze surge. We've got to build on this bottom if it is a bottom. So let's see. It's the best day in the S&P that we've seen in 6 months. This is why we trade options. I can't say that enough. So we can ride through the ups and the downs. And our positions now are for June and July expiration. So we've got some time for this follow through to happen.
Starting with JD, a position there that you have on.
Right, a lot of tech. Looking for tech takeoff. We'll get to that in a minute, but for their June plays, we'll just go quickly through them. We've got JD.com, Intel, Cisco, Micron, and again, it's all based here on this NDX bounce. We'll see if this can happen one more time that's happened in the past.
Let's take a look at your July options expirations. What do you have in play there?
Well, those have about 45 days of time, so plenty of time for development. Now let's get back to tech. Tech made its highs only just a month ago, so a lot can happen in just a few weeks. We've got a Merck play that's closing in our 50% profit target, and Verizon position we put on last week.
Your WPI trade trigger, which is pointing to target.
It's on target.
I hope so.
On target. The target, July $75 call. So now Target's a stock that's traded between 60 and 80 here for the last weeks. Now that target's 100 in the bigger picture. In this breakout here, we're looking for it to take out this recent high and take out that 90 level that was that top. Now 70 had been a really strong level of support, again at the midpoint of this recent sideways action. Now more important than all of that is the smart money action right now.
What's happening there?
People are piling in on Target right now. They see some value. If you look at this stock, compare it to Walmart, I like Target better, but that's just my personal opinion. The PE ratio is 15 in Target, so it's cheap in relative value, whereas Walmart has a price-to-earnings ratio of 20, so it's got some catching up to do, and somebody sees that.
Somebody sees something going on. Now, before you take off, let's talk about your trading floor takeaways.
Number one, not the terrible twos.
Okay.
All week long and all the past couple weeks, people have been so concerned about the yields moving lower. The 10-year note yield got down to very close to 2% here recently. Now, that's not a bad thing. Everybody was very concerned, but in 2016, we went straight up. 2017, we were at 2%. The market was higher as well. So it's not a terrible two.
But there's number two, which leads us to what's going on with the S&P 500.
2,800. Closed above that level yesterday, which is very significant. We mentioned it last week. Last week was the first dip that we had seen below 2,800 in many, many months. So we're back above. We want to watch that on a weekly basis, but that's nice to see it test it and reject it.
And then number three, tech turn.
Yep, that's the theme of a lot of our positions here. Technology was 10% off its highs, all right? And then we had the big U-turn yesterday where it was up more than 2%. So this is 5 times since 2015 that you've seen technology sell off more than 10% from the top. What happened each and every time? New all-time highs. We'll see if we can do it once again.
Wow, somebody, if they caught that trade, made a lot of money in that move yesterday. Yep. Thanks for coming on the show.
Thank you.
For more Business First AM, check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.